All right, let's jump right in. Today, we're going to pull back the curtain on what is, without a doubt, the single most important report in the hotel business: the income statement. This is where we get the real story behind how a hotel is doing.
And that brings us to the big question, right? You might see a lobby buzzing with people or a restaurant that's packed every night and think, wow, this place must be making a killing. But that's not always the full picture. To find out if a hotel is truly profitable, we've got to look a lot deeper.
And that deeper look, it comes from the income statement. You'll also hear it called the profit and loss or just the P&L. I always like to think of it as a financial story. It's got a clear beginning, middle, and an end, and it all unfolds over a specific time period, like a month or a quarter. Okay, let's dive into the core of this. At its heart, the formula is actually incredibly simple. You take all the money that came in, your revenue, you subtract all the money that went out, your expenses, and whatever is left is your profit, your net income. But in the world of hospitality, the details behind revenue and expenses are where things get really fascinating. So let's start at the top of what I call the profit funnel. This is the widest part. It's where every single dollar the hotel generates comes flowing in. This is your total revenue.
And when we look at where that revenue comes from, it's probably no surprise that rooms are the absolute powerhouse. They're the biggest slice of the pie by far. But what's really interesting is that food and beverage and all the other departments still make up over a third of the total income. That's a huge piece of the financial puzzle.
And here's a closer look at where that all comes from. Of course, you've got your main earner, the rooms. But then you have all the activity from restaurants and big banquet events. Then you add in the money from the spa, the gift shop, and even the stuff you might not think about, like cancellation fees or resort fees. You start to see that a hotel is really like a collection of many small businesses all running under one roof. Okay, so we've got all this cash flowing into the top of our funnel, but the money doesn't just stay there, right? A big chunk of every single dollar that comes in has to go right back out. This is where the funnel starts to get narrower as we start to account for all the expenses, the cost of keeping the lights on and the doors open. These expenses usually fall into a few key buckets. You've got direct costs, like the food you buy for the restaurant. Then there are operating costs, like housekeeping supplies or marketing campaigns. But the real giant in the room is almost always payroll. Hospitality is a people business, first and foremost, and paying and supporting the staff is typically the single biggest expense a hotel has. And this gets to a really critical insight in hospitality finance. A hotel's restaurant can be packed every single night, bringing in what looks like a ton of sales. But once you subtract the cost of all those ingredients, the wine, and the salaries for the chefs and servers, the actual profit margin can be surprisingly slim, way slimmer than for a hotel room. It's the perfect example of why high revenue doesn't always equal high profit. Now, because of all these moving parts, smart managers don't just wait around to see the final number at the very bottom. Nope, they use key checkpoints along the way, special metrics that help them figure out the true profitability of the operation as we move down that funnel. This journey to the bottom line has a few really important stops. First, you take your total revenue and subtract the direct operating expenses, things like payroll and supplies. What's left is your gross operating profit, or GOP. Think of this as the purest way to see how well the hotel's day-to-day operations are running. Next, from that GOP number, you subtract fixed costs that management doesn't really control day-to-day, like insurance or property taxes. This gives you a number called EBITDA. And finally, after you account for interest on loans and taxes, you get there, the famous bottom line, net income. That's the ultimate profit. This is exactly why a metric like GOP is such a powerful tool. A manager can use it to compare the rooms department directly against the food and beverage department. It gives you a real apples-to-apples view of which parts of the hotel are the most efficient at turning revenue into actual operating profit.
And that, really, is the whole point of the income statement. It's not just some report card on how you did in the past, it's a roadmap for making smarter decisions for the future.
This financial story revealed so much. It tells you which departments are your superstars and which ones might need a little more support. It shows you exactly how a slow season hits your costs. It helps you pinpoint where you might be overspending and guides those critical decisions on everything from how many people to schedule at the front desk to how much you should spend on your next big marketing push. I think this quote just sums it all up perfectly. The hotel business is this incredible mix of moving parts: seasonality, service, operations, and the income statement is the one tool that makes sense of it all. It translates all that complexity into a single, clear story of performance. So whether you're a manager, an investor, or you're just curious about how this all works, the principles are the same. It's about looking past the busy lobby to understand the real flow of money from that top line all the way down to the bottom line. So I'll leave you with this. What story is your hotel's income statement telling you?